Hello and welcome to IFN on Air Roadshow. Today our focus is Kuwait and the topic is the next phase, Islamic banking, finance and investment in the Kingdom of Kuwait.
And I will kickstart with this very first question is, in your view, what should be the objective of Islamic financial institutions in Kuwait, whether investment banks or Islamic banks in general, with regard to the sort of the current market scene in Kuwait?
Thank you, Isam. Assalamu alaikum, everyone. Thank you very much for this great opportunity. I liked your quote on annual health checkup. That's a very interesting way to put it. Your question is, what should be the objective of, or what should be the objectives of Islamic finance? I think we need to look at that from the evolving dynamics of the economic background in which we are getting shaped. I think that's very important. 2020, we just went through a massive COVID surge, lockdowns, economic growth fall, and then 2021 has been a year of stabilization, recovery. And in this scenario, there are three things that are material for Kuwait before we think about the objectives. One is the continuous dependence on oil and therefore lack of diversification of the economy. And you have to remember that Kuwait's economic growth fall has been the steepest in 2020, and its recovery in 2021 has been the slowest. And therefore, we have to come back to this question of the dependence of Kuwait on oil and a deficit-oriented economic structure. The last 5 years has been deficit-oriented, and according to IMF projections, in the next 5 years, it will be even more. So this is the first point. The second point is the demographics. The demographics are changing rapidly. It's an young population, very technology savvy, and therefore their expectations are also going to be very different from the baby boomers and millennials that we have been catering to so far. And the third aspect is, of course, the ability to harness entrepreneurship and innovation into the economy so that we can quickly diversify away from oil. So in this background, of course, any objective of the Islamic finance industry at a broad level should always be growth. It's always been growing. And so it's a growth industry, and it will remain a growth industry for years to come, given the potential that we see. So the first objective must be definitely growth. The second objective should be improving access to customers by aggressively using technology. And we are already seeing a lot of such initiatives in Kuwait. I'm happy to reflect on that later when we get there, actually. And the third and the most important objective, according to me, is a better storytelling of Islamic finance. I think we are not doing a great job of storytelling the virtues of Islamic finance. A decade back, if you observe, ESG was a non-existent topic, and Islamic finance was around then. And then ESG enters the picture, and today the ESG has overtaken Islamic finance in terms of in the market share or whatever you call. There are many proponents to that, and we need proponents for Islamic finance as well. We need professional storytelling about the benefits, and therefore we can make the growth happen in a more sustainable manner. So that probably is a bit long term, but I think it's a very important objective to have. So that probably would be my objectives for Islamic finance, given the dependence of Kuwait economy on the oil, and Kuwait's getting used to deficits, and deficits will have massive implication for debt, and the debt opens up opportunities for Islamic finance as well through sukuks. So, and the demographic change that I highlighted before. So I'm happy to pick up many more points, but I don't want to keep going. Like, this is just an introductory, overarching view of the objectives.
Thank you, Mr. Raghu. I mean, we've always, we've been seeing some consolidation taking place amongst the banks in the region, and we had our big sort of story 2 years ago, which basically went into a halt. The merger between Ahli United and Kuwait Finance House. From your view, do you think we'll be seeing more consolidation sort of taking place in the banking sector, or also in the Islamic finance sector? You know, since 2008, the investment banking sector has been sort of suffered a lot and lacked liquidity, and many of those investment companies became low key in their activities. Are we going to see some mergers taking place there? And that's on one side. On the other side, do we see sort of fintech revolution in Kuwait amongst the banks? We heard about Numu. We're hearing about WII, digital bank of MBK. What are your views?
Thank you, Sam. I really like the comment of Dr. Hissa that it's a non-zero-sum game. That's a very nice way of framing it. Regarding the consolidation in the banking industry, consolidation will definitely happen because of the skew in the banking industry. Whether it is Kuwait or Saudi Arabia or UAE, if you look at the banking sector, you may have 10 players, but then you have very big players and very small players. So that will always be there as a motivation for consolidation. And definitely, fintech will play a big role as the banks are trying to, grow organically and inorganically. They will definitely want to gobble up some fintech firms and then use that to really achieve growth. But the context of consolidation is very interesting in the sense that, especially if you talk about the fintech angle to it. Now, fintech or technology or digitization or artificial intelligence, machine learning, all this robotics, all this is now changing the very fundamental landscape of who should do what. Okay, traditionally, our understanding is banks should do banking. Okay, and an insurance company should do insurance. An asset management company should do asset management. This is our traditional understanding. But already this is getting disrupted as a thought. We know Amazon and Google, and others are also morphing into financial services companies and wealth management companies, and small-time, fintech companies can seamlessly do banking today. So the idea of banking should be done only by banks is a very historical idea in my view. It's not going to stay that way. Okay, so this is the context in which the consolidation will happen. Okay, so you don't consolidate just to gain market share or size. Okay, that's yesterday's thinking. You consolidate because you know the fundamental, ground on which you're standing is changing as we speak, thanks to technology and digitization. So if boards of bank can think, like this, then they will pursue consolidation much differently compared to a traditional way of looking at consolidation as the means to increase your size and market share. So that's probably how I think. So eh, eh, you know it's there's a great saying by Steve Jobs. He said that we all need banking, but we don't need banks. So, okay, so this is the technological revolution that we are talking about. So in that context, how do you visualize consolidation? In that context, how do you stay ahead of technology? What type of fintech competitiveness that you want to build within your ecosystem, so that even if tomorrow non-banks come and do banking, you have a good business model to really sustain the business.
Agility is also applying for a digital bank license. So that's so you have somebody coming from the outside trying to compete into the market, which is an interesting development. But one more question. If you have a crystal ball, would you think that the KFH Ahli United will go ahead, or it might just stay low for the next few months?
So, I don't have a crystal ball, because to answer that question, you should have a board view, and which I don't have. But I want, if you ask me, my expectation, I want it to happen, because GCC has always been one of the major problems that we have in GCC is the lack of size globally. And we need big banks, to go and compete in the global marketplace. So the bigger they get, the better it is, I'm sure. And but I don't have a crystal ball.
It's about sukuks and sukuk issuance. Well, are we going to see more sukuks, corporate sukuks coming to the market in Kuwait? We know that we've heard from Hussam that with now we have the regulations, but what's stopping the corporates from issuing sukuks? What we've been seeing mostly, where banks and some major corporates are basically coming to the market. The sovereign is another issue, until we get the public debt law in place. So what's stopping the growing the market? Now we have the laws. Now we have, the Borsa, Kuwait Borsa is prepared to list bonds and sukuks and for trading. So where are we? Can we start with Mr. Raghu?
Yeah, that's a very interesting point. The bond issuances has always been dominated by sovereigns and banks, and not by corporates, even though the total bond issuances have been growing very healthily. And the wallet share of Islamic banks or Islamic finance in that issuance has increased from, say, 9% in 2010 to now nearly about 30%. So, but the dominance of sovereigns and banks continue, and corporates are not able to really take big advantage. That's because, in general, sovereigns and banks are the aggressive type of borrowers in the market compared to corporates. Corporates are dominated by family businesses, and family businesses have, probably lower liquidity needs compared to the broader government and banks. Banks, it's built into their business model, so they have to borrow. And if there is any pricing efficiency, I'm sure they will come the Sukuk way. So I think it will remain that way for some time to come. It will be dominated by sovereigns and banks, in terms of the structure. But I have to emphasize here that the overall size of the pie is increasing in terms of issuances. Even in 2021, I think we have robust issuances of bonds and a good share of Islamic finance in that component, actually.
Final thoughts, and if you just touch up on, are we going to see any green sukuks or green bonds or something to do with ESG?
That's exactly, I was about to tell you that we missed discussing about green bonds and green sukuks. They are great opportunities in the evolving climate change debate that we are seeing. And one more thing that we need to be cognizant of is the outperformance of Islamic indices in the last 3 years. Whether it is developed index or emerging market index, we have a very significant outperformance, 5% to be exact. And that's because they avoided bans, and therefore the technology and healthcare share went up, and therefore but again, poor storytelling means that we have a very small Islamic asset management industry of just $150 billion. So both are very good focus areas for the future, green sukuks and asset management.
I have really enjoyed this dialogue, this discussion, and it was quite so lively, shed the light on many perspectives about the Kuwaiti sort of Kuwaiti Islamic finance market. So I really want to thank, on behalf of the panelists, Red Money for organizing IFN Kuwait on air and for facilitating this discussion. I'd like to thank each and every one of my fellow panelists. I enjoyed sort of learning from you.
Very good. Thank you so much, Issam. Fantastic session, really good, really constructive, very insightful, and also some good developments that we hope we can see in the market in the coming months.